Michael, I'm really happy to see you. Really happy to see you. And I always loved in your background. But what is that exactly? Is this a boat? It's like, what is that?
It's a 19th century handmade model of a 17th century sailing ship that used to ply the Far East Indies trade for the Dutch East India Company. So you can imagine they made a very complicated ship, in the 1600s. And then in the 1800s, a bunch of model makers decided to make a model of the ship. And so it's an antique model of a pretty extraordinary sailing vessel. Reminder of what human beings are capable of doing, when you consider all of the systems that they put into that ship in order to affect commerce.
Love it, love it. And I mean, in all of your interviews, I always saw it, and I thought, wow, this is really cool. And for a second, I thought maybe it's a green screen, but no, it's real and is really cool. By the way, Michael, you did some incredible things, and of course, I want to go into Bitcoin and everything else. But I was just curious, and I went to check your biography, and I thought I would love to have a biography like that. Is incredible. And apart from MIT, I knew about it. Something got my attention because I read that Saylor became fascinated by the application of computer simulation technology to public policy and business strategy. Okay. Eventually writing his thesis, a mathematical model of a Renaissance Italian city-state, while studying system dynamics, etc., etc. What was this Italian city-state?
Well, you're probably familiar with Machiavelli. Machiavelli's famous book that most people read is The Prince, which is kind of a book on, political dirty tricks and doesn't have the best reputation. But Machiavelli wrote another book, the Discourses, and the Discourses was a study of stable government and virtuous government based upon successful Renaissance Italian city-state models. And the Discourses describes the establishment of a governance structure that includes an executive branch, a legislative branch, and a judicial branch, which happens to be the three branches of government in the United States right now. And most modern governments have a judiciary, a legislature, an executive branch. So the founding fathers of the United States copied that model from the Discourses. And when I was at MIT, I discovered the book, and it occurred to me that he was actually describing higher order feedback systems. He's describing the checks and the balances and the dynamics between all the different aspects of government, and describing how it helps the city-state make it through supply shocks, famine, wars, and other dislocations. So I created a computer simulation, an n-dimensional computer simulation, not with nonlinear math. And then I basically attempted to reproduce all of the various scenarios described by Machiavelli in that book, and show that they were all easily explained by mathematics and conservation of energy and nonlinear dynamics. And so it was a thesis on human behavior based upon political science, but the idea is to apply computer science and mathematics to human systems in order to design better political economic systems for the good of the people.
Interesting, and also very, very actual, I would say. I was wondering, Michael, if you, when I hear you talking, you always have this huge knowledge about everything. You can talk about physics, economy, business, marketing, quantum physics. I don't know. Is this something that you built in your young age? Or you have like a media diet where you, I don't know, you study, 300 books a year and you always go deep into these topics, or your brain just always work like that?
They say experience is what you get when you didn't get what you wanted. So I have experience because, you
Right.
know, I've been running a publicly traded company
For a long time.
for
Yeah.
22, 23 years, and I've run MicroStrategy since 1989. So I have a lot of experience as an entrepreneur, and I have experience running a large enterprise, and I have experience, you know, launching new businesses, and some succeeded, and some failed, and some half succeeded. I was fortunate enough to have a lot of experience with employees, you know, and experience with customers. And I've been around long enough to see various cycles, economic and political cycles. But I think also I had a very fortuitous education. When I was at MIT, I studied two disciplines. I got a degree in aerospace engineering and another degree in the history of science. And it turns out that both of those subjects are in themselves multidisciplinary. Aerospace engineering is really an amalgam of civil engineering, electrical engineering, systems engineering, computer science, mechanical engineering, ocean engineering, if even chemical engineering. If you took all of those engineering disciplines, you need them all to make an airplane fly. Right?
Right.
If you think about what an airplane is, right, compared to a car, right? An airplane's a vehicle, but you know, cars can be much heavier and they just roll on the ground. Whereas an airplane, you know, you have to calculate what happens when the airplane gets turned upside down
Yeah.
under 9Gs. And you never really have to design a car to be turned upside down in 9Gs. And a building, another structure, but buildings don't have to move. Right? So you take a building and move it, it becomes a car. You take a car and you fly it, it becomes an airplane. And when you think about a ship, you know, a ship is designed to move through a fluid, and shape matters. So whereas an airplane also has to move through a fluid, but the difference is, you know, the density of the fluid is changing for the airplane, you know, in a relevant sense, depending upon the temperature.
Got it.
You know, and it's not quite so relevant for other disciplines. So if you're an aeronautical engineer, you're studying the design of mechanisms under constraint, and you have to think multidimensionally, and you can't make simplifying assumptions that are made in many other disciplines. And if you get one thing wrong, the plane crashes and burns. Right?
Right.
You can design really sloppy mechanisms in cyberspace. Like when you're building software, you know, you can design really ugly mechanisms because it's very forgiving. And if you're building a building, you would just build it with steel because steel is infinitely strong and powerful, but it's heavy. And so when you have to make it fly, you can't simplify, we'll just build it all with steel. Now you're talking about composites and you're talking about aluminum. So I think that the first half of my engineering education was think n-dimensionally across all different systems, you know, and understand cybernetics and control. I mean, control theory is really important in aviation. For example, you design an airplane and it tilts this way, the lift falls on one side, or falls on one side and increases on the other side, and it brings it back to the level so the plane flies in a stable fashion. If you design an unstable airplane where it tilts and then the lift accelerates, then the thing goes into a tailspin and you crash and burn. So this idea of building stable systems is really, really important, life or death important with aviation. And a lot of those engineering principles pop up in Bitcoin and digital property. You see them in the Bitcoin network, and it's very natural. And you would perceive them differently if you're an aviation engineer. And if you look at the history of science, well, the history of science is political economy plus history plus science plus economic, you know, various other dynamics. And it forces you to think in a broader sense. What happens when you introduce atomic weapons, or what happens when you introduce running water or antibiotics into a civilization, or x-rays or radio or railroads. And when you start thinking about the introduction of technology and network interactions and how they have an impact on distribution of power, then you have the basis for an understanding again of what is a monetary network like Bitcoin, right? What is a rail network, right? There's no Paris if it isn't the center of a rail network, right? What is New York, the center of a maritime network, et cetera. So studying those things always brings you back to the preeminence of technology and network theory and the design of these things under constraint. And so I kind of got to my stage in life having had a theoretical background in technology and physics and engineering, and then having social sciences background and the impact of engineering on civilization and human condition. And then I got 35 years to watch that happen in the real world running a company. And then along comes Bitcoin. And so it's kind of like, the right thing at the right time. And if you have an understanding of a little bit of everything, then you appreciate Bitcoin, because Bitcoin is really engineered with a little bit of everything in it.
That's explained a lot, Michael, because I remember first time I saw an interview of yours, I thought, wow, like, oh my God, how can he open so many different angles and perspectives? And until that moment, I was looking at Bitcoin just, with one lens, that's it, But the way you have to describe the words you use, the analogies, the knowledge that is multi-dimensional, I think helps it resonates with so many more people, because maybe if I listen to a Bitcoin extremist, I say, all right, cool, but I'm 50 years old. I don't understand where you're going. But if I listen to your business point of view, or the property, why is this a digital property? So that's a different thing. You mentioned atomic, and of course now there is this Ukraine and Russia situation. What's your take on that, and what will be the impact on Bitcoin from this Ukraine war? Do you see a different perception now about Bitcoin when you talk with companies and institutions?
I think that wars catalyze the adoption of new technology. And that's the history. What you learn in the history of science is that new technologies are oftentimes presented and then they're rejected by the establishment until there's a war. And when there's a war, all of a sudden we decide that we want to adopt new technology because we're more afraid of losing the war than we are afraid of the new technology. So, we've got a pandemic, a war on COVID, that accelerated all sorts of new technologies, including Bitcoin. I think the Ukrainian war has accelerated it some more, and a couple of different ways. First of all, you've got hundreds of millions of people in Eastern Europe who have their currencies collapsing. The Russian currencies collapsed, but the Hungarian currency is weakening. The Ukrainian currency is weakening. The Polish currency is weakening. The Turkish currency is weakening. Every currency in that region is weakening, and some are completely collapsing. So people that earn money, the working class earns money in the currency or save money in the currency, are becoming insecure with their currency. The currency doesn't work anymore. The second is the banking systems are collapsing. If you wake up and you find out that there's a half-mile long line outside of an ATM for you to withdraw $33 in cash, then you realize the banks aren't serving you, the cash is not serving you, and you need a new form of currency or a new medium of exchange if you're going to get on with your life. And so people, and that's happening in the Ukraine, but that also happened in Russia, right? Where they shut down the stock market, they shut down and the currency markets, etc. When the borders get closed, when the banks fail, when the stock markets fail, in the extreme situations like you see in Lebanon, where the banks literally freeze your assets, close, and then they devalue your assets by a factor of 10, then what you have is you have 400 million people directly affected where they can't trust their government, they can't trust their bank, they can't trust their currency. 400 million directly affected. What you have is 4 billion people watching, indirectly affected in two ways. First of all, everybody else in the world is suffering from inflation that's already rampant. We were already inflating the currency supply by about 15% a year or more before this. And then the response of Europe and the US to the war exacerbated the inflation, right? We drove up the price of energy. We're driving up the price of just about everything. We're impairing the supply chains. So you've got everybody in the Western world probably staring at 20% monetary inflation right now. They're losing 1 to 2% of the value in the euro and the dollar every month. Okay, that's also happening in China. So anybody in the world right now is getting a double dose of inflation because of this war. They're also watching, and at every level, people are realizing that currency derivatives and traditional conventional property is no longer secure. The Russians had hundreds of billions of dollars of gold and sovereign debt seized, but the Chinese have $3 trillion worth of that stuff. Wow. So if you're Chinese and you're thinking, what happens if the United States just seizes $3 trillion of my money? That makes you a bit insecure. And of course, that rubs off on the Indians, the Pakistanis, right? Everybody in the world is now insecure about their sovereign reserves at the corporate level. Every company is insecure about their treasury, and every individual becomes insecure because what you have is a precedent where a politician can, in Canada, we have a politician that seizes the money of the citizens of Canada without due process, right? Without a law. And then you have the plight of the Russian oligarchs, not very sympathetic, but a politician can seize the property of a citizen of another country without a war, without a law. And so who's going to be confident in their property rights? If your own government doesn't seize your money, then someone else's government will seize your money. If you don't own the country, if you don't control the government, you probably don't have any secure property. If you do own the country, all your property that's outside of your country is still insecure. So this is an unprecedented time of insecurity combined with inflation and literally the collapse of currencies and currency derivatives. You could look at this war as kind of a wake-up call for everybody in the world. If you're at all paying attention, what you would realize is you really want crypto property, right? Since I can't rely upon property in any country, and I can't rely on any currency, and I can't rely on any currency derivative. And a bond is a currency derivative, a swap is a currency derivative, a value stock is a currency derivative, a piece of real estate, commercial real estate that generates rents is a currency derivative. So if I can't trust currency derivatives and I can't trust the government and I'm insecure about my property, what would you do? And the obvious answer is convert your property into crypto property or digital property, put it in cyberspace beyond the reach of any government or any other hostile action. And then make sure if it's crypto property, it's not a currency derivative, which means that it's inflation proof. And the idea of inflation proof property that cannot be confiscated by a hostile regime is a matter of life or death for hundreds of millions of people right now. But it's probably the most important thing in your world for the other 2, 3, 4 billion people.
Sorry, what I don't understand, Michael, is I totally agree. What I don't understand is why, with this scenario, companies and institutions are not just running and adopting Bitcoin, and there is no like a mass adoption. Why is not happening, in your opinion?
I think there's a lot of inertia in capital structures. If you look at capital structures right now, for example, there are large pools of capital that are tied up in institutions that by mandate can only invest in certain assets. So for example, if I had $10 billion of capital for investing in stocks, well, I can't buy digital property for 2 reasons. One reason is my mandate from my limited partners keeps me from owning property. I have to own securities. And the second would be that I don't have a relationship with a digital property exchange, a crypto exchange that can actually buy it for me. And the third, of course, would be, since my limited partners won't let me buy it and I don't have the exchange agreement, I also don't have all the security protocols within my own institution to be able to custody it. Like,
Right.
who should I trust with that? If you actually calculate how long that takes, it could take 5 years to change my mandates with my limited partners.
Whoa.
It could take 1 year to set up a new custodial relationship and vet a new exchange. It could take 6 months to a year to set up the security protocols. So if I had the mandate, it'd probably be a 1-year process for me to change my institution. If I don't have the mandate, it could be multiple years. So look, if you have $10 billion and you were given the money to invest in fixed income instruments, you're getting 2%, or maybe you're getting paid 1 or 2% a year. So you're getting paid $100 million a year just to manage the money. And so you go and you buy bonds that yield 2.5% interest, and then the money loses 15% of its value a year. So the real yield is minus 12.5%, and you're literally destroying $1 billion a year, but it's not your money, is it?
Yeah.
You're destroying $1 billion of value of some other investor's money. And so your choice is give all the money back to the investors and you're going to lose $1 billion or $2 billion, or keep investing it pursuant to your mandates that were set in the year 2007, right? And so you've got trillions, $500 trillion of capital, and they're all tied up in different kind of structures like that. That's one example of inertia. If you had $10 billion worth of real estate in downtown Moscow right now, why don't you just sell that and put that into Bitcoin? Because it's not so easy, right? I mean, Monty, that's another example
of difficult now.
Right. So you see, there's a lot of capital that is already committed in structures, and it'll take a while. Probably takes anywhere from 10 to 30 years for the capital flow out. If there was a spot ETF where I could just go buy $1 billion of Bitcoin in a spot ETF, then maybe I would do that. But of course, there isn't the spot ETF because there's regulatory inertia.
Yeah.
There's, and there's also other forms of inertia, like FASB has a certain accounting treatment. The accounting treatment for Bitcoin was established when there was no company in the world that had more than $2 million of it on its balance sheet. Okay, so a while ago, it was irrelevant. And today, of course, there are tens of billions of dollars of Bitcoin on balance sheets of publicly traded vehicles. But the accounting is still indefinite and intangible. Indefinite and intangible accounting means that if I buy $1 billion of Bitcoin and it trades down by 50%, and then it trades up by 1,000%, the fair value of it is $10 billion, but I would be showing it on my GAAP accounting statement as $500 million. And I would never write it up again. Okay, so if you're a publicly traded company and you have a successful business selling streaming video, and you have $10 billion of capital, and you go buy the Bitcoin and you make $100 billion for your investors, it'll look like you lost $5 billion for your investors. And then you have to explain that, and that's very hard to explain. And if you're a conservative CFO, you would think, do I really want to go through the headache of explaining this to my investors? And maybe I'll get fired by some random investor for making money because they thought I lost money because I've got an antiquated accounting rule. So, if you're wondering, why doesn't everyone just act rationally? Well, the answer is some people have organizational inertia. Their incentives are to continue to engage in the strategy they've engaged in for a decade. My grandfather invested in real estate in Kiev, and I will continue to do that, right? There's inertia. In other cases, they have regulatory inertia that's holding them from doing what they want to do, like these accounting and these other securities guidelines. And then in a third case, sometimes it's intellectual inertia or ignorance. Like if I said to you, if I came to you and I said, oh, you have a house and you've got no electricity in the house, Monty, and
Right.
electricity is a good thing. So why don't you just install electricity? You would go, what? Wait a minute. How long does it take to figure out how to install electricity without killing myself? It's like, are you stupid? I mean, are you just against electricity? And the answer
Right.
is no. It takes a lot of effort. It might take 100 hours of study to figure out the project to install electricity in my house or my hotel. So Bitcoin is like that. It's digital energy. And some people haven't adopted it because they don't have 1,000 hours or 100 hours to study it. And some people haven't adopted it because the regulatory guidelines are hostile to their business
Right.
adopting it. And some people haven't adopted it because they're getting paid billions a year to do the opposite. And it's you know, it's like, you're paying me to trade fixed income sovereign debt. So why? And I know it's an awful thing. It's losing 10% of its value a year or more, but I'm getting rich doing
I'm,
it.
I'm making money out of it and I keep doing it. Sure.
Yeah, so go home to your wife and tell her that you decided to give up the job that you're getting paid a lot of money for to do a different thing, and you'll get by, right? So these are all reasons why the world doesn't just immediately change. But having said all that, the world is changing, right? I mean, Bitcoin was trading at $9,000 a coin, in June of 2020, and we're not 2 years later, and it's up by a factor of 4, right? So it is changing. Billions of dollars of capital are flowing, and they may flow slower than some people would like, but it seems like it's the most disruptive force in the financial universe right now, and the world is waking up.